Happy Friday and welcome to April, Robert. And April, unfortunately, facing a huge inflationary headwind, but March was a pretty decent month for the stock market, surprising many. How do you read the macro environment right now?
Yes, well, good morning, Brian. Thanks for having me on again, and welcome to a new quarter. I think the big thing to point to here is, as you said, I think we're at a crossroads, and that crossroads is that the market has been very resilient in the first quarter, resilient to persistent inflation, resilient to the inverted yield curve, the mixed signal that you pointed out earlier. And so far, markets have held up reasonably well. But the critical question here is how will earnings unfold? How will margins unfold? And I think it's really a make or break quarter for earnings as it relates to stock prices going forward.
Well, listen, you've obviously, if you watch CNBC, and I'm assuming you do, Robert, you may have heard just, like every hour about this inverted yield curve, right? Now, nominally, it did invert. The point I tried to make at the top of the show is that when you factor in inflation, like the pros do, that the real yields, as they call them, have not inverted. So are you looking at that so-called inversion as a thing? Does it matter? Or is it just kind of a historical anomaly we have to watch?
I think there are a lot of mixed signals around it. You're right. The real yield curve is inverted. You could make the argument that this is all about inflation, less so than about growth. I think you also have to consider the fact that there is a wide range of the timeline with which the yield curve inversion works. So sort of on average, 12 months or so until a recession, maybe a bit more, but a wide range around that. So that's another mixed signal. And then the final point I would make is that job growth has been very strong, and there continue to be a huge number of jobs on offer, around 10 million or so. That's also very unusual in the context of an inverted yield curve and anticipating a recession. So I'm not anticipating a recession. I think the yield curve here is more distorted from inflation, as you say, and also perhaps pointing to a slowdown in growth, but not a recession.
All right, so what's your best advice? We like to call them Opportunity Fridays here on Worldwide Exchange. Is it to lever up your home and buy shares of GameStop on margin? Or is there a smarter investment strategy that you are advocating right now, Robert? It is April 1st.
I think it's smart to be a little bit more conservative than that. It's been a volatile market. There's a lot going on here. We do think there are some areas to like. I do think earnings season will get the message back on track for fundamentals. Stocks will likely track earnings higher from here. And the places that we like are those that have had strong and growing margin growth. So places like technology and consumer discretionary have done a great job in managing margins despite all the problems. And our expectation is that they'll continue to do the same going forward.